Let's get in our guest today, Ambareesh Baliga, Managing Partner of Global Research at Edelweiss, and Dr. C.K. Narayan to talk about the charts as well. Gentlemen, thanks so much for joining in. It had a bit of a spiraling impact, really, the rupee did on the markets. Before I get to Dr. Narayan on what the charts suggest, Ambareesh, just one word really on whether this free fall, if continues, could put added pressure on the index, and therefore, where could the index go?
I mean, in case we see the rupee slipping further, surely it will add to the pressure on the index. Although we expect that there should be a good support in that region of about 59.40 to 59.70, but in case that is broken, we could see levels of closer to about 5,800, where there's another big support which is there at about 5,800.
Dr. Narayan, purely on the charts, how does this look? I mean, 2% fall on a Friday, the first day of the new series, not something that too many people would have anticipated maybe. But can this actually slide down further? And if the rupee stays weak, can we actually go down all the way to 56 or 5,700?
Well, I would think that is certainly on the cards right now. Now, whether you attribute it to the rupee or you attribute it to something else, see, the rupee has been weakening for a long time. It's not as though we suddenly woke up to this particular fact today. And if you really see it, the major low in rupee was exactly about a year ago in June of 2012. So it seems to be coming up for some sort of an anniversary low. Now the question is, if the rupee stops falling, will the market revive? I don't think that is either. That's also going to happen. See, there does come a stage in a trend when people are ready to take some profits, right? They just need some excuse. Now, whether Europe provides it, or rupee provides it, or politics provides it, or some earnings provided, that'll all be incidental. I think we have come to that particular point right now where the rise was being led by thinner and lesser stocks. The market breadth was so ridiculously thin that we were all just waiting for this to happen. Now, whether it comes in Garb A or Garb B was just point for sort of writing articles. So the key point I'm making here is that the market trend definitely seems to have reached a point where it has turned. I think 5,700 is something that we should all definitely look at, because that's what patterns seem to actually suggest. So any rallies that we see in the coming week should be used to sell.
Okay, stay on, gentlemen. Lots more to talk about. We've discussed the market first, but lots of individual stocks which are newsmakers. Talk about all of them on the other side of this quick break.
Back with your trades the week ahead. While the damage was done only on Friday, on a net basis we managed to close just flat on the Nifty. But yes, 59.85 is how we've shut shop on Friday, so not giving a good feeling. But the one space that really held out this week on account of some of earnings coming in was indeed autos. Tata Motors, M&M, both were star performers from this space. Good earnings coming in, beat street estimates, closed in flat for M&M over the week, and Tata Motors as well saw good gains coming in over the week as well. CK, want your quick call on Tata Motors as well as the M&M, and is there still scope to buy into these names?
Well, between the two, I think, the setup in Tata Motors seems to be a little better. We have seen the prices coming up to challenge the highs. Similar thing in Mahindra, no doubt, but I think the kind of sell-off that we saw in Mahindra for the week is certainly not something which is very, very attractive. And in fact, if Mahindra were to break down below 960, it would probably set off a short-term, let's say, profit-taking downtrend. Whereas in the case of Tata Motors, it seems to have the support and the good feeling generated by JLR for so many quarters in the past and a couple of quarters to come in the future also. I think between the two, I would rather pick Tata Motors rather than, let's say, M&M.
The other newsmaker for the week, for a lot of reasons, the results, the bonus, the talk of acquisitions in Europe is Sun Pharma, 7.5% higher in trade. Let's first get in Darshan to speak exclusively about what the numbers were and how did brokerages react to those numbers. Darshan.
A fresh lifetime high was hit on the stock of Sun Pharma, clearly post the numbers that came in. If you're looking at the financials, they were pretty much in line with what we had anticipated, but the management commentary was extremely positive. The other factor that helped was the fact that there was a 1:1 bonus that was given, which was appreciated by the trading community. Apart from it, the management has guided for 18 to 20% growth on next year on the sales, which is very good considering the fact that their base is extremely high. The next is the research spend have been increased by almost 150 basis points, so that was something that the analyst community appreciated the fact, and almost 25 new ANDAs to be actually filed for Sun Pharma, which is one of the largest that for an Indian company. So clearly all these points coming in very, very positive for Sun Pharma. A lot of brokerages coming out and raising the target price of Sun Pharma. All of them already had a buy on the counter, so there were no chances of an upgrade, but CLSA coming out and making the target 1,220. Apart from it, Jeffries 1150 was the target, and HSBC put a target of 1163. So all the brokerages turning extremely bullish post Sun Pharma's excellent set of numbers.
Oh yes, indeed, and thanks for that, Darshan, and all that talk about a possible acquisition, whether it happens next week or 1 month from now or six months from now, is anybody's guess though. Lots of rumors doing the rounds. Ambareesh, what does one do with Sun Pharma? Strong set of numbers, brokerages upbeat, and of course talks of that possible acquisition, however large or small it may be. But all of that put into place, what do you do with the Sun Pharma?
You really can't go wrong on Sun Pharma, and this is what I've been saying for the past few months, if not the last 12-13 months, that clearly the leaders are changing. I mean, earlier you had leaders like Ranbaxy and Cipla, but now it's shifting from there. I mean, like this has been happening for the past couple of years, that it has actually shifted from there, and now it's moving into Lupin and Sun Pharma. So if it is, if you have a pharma portfolio, you should be having Sun Pharma and Lupin.
Coal India as well came out with its earnings, and the net profit clearly were above street estimates. So that is one stock which actually held out in trade. You also had Sterlite, wherein there was news coming in that they've sought some relief for Sterlite Industries. The Tuticorin plant is now likely to restart as well. CK, quick call on what Coal India's charts are now indicating.
I think Coal India has been sort of steadily building up strength, successive higher bottoms on the charts, indicating that buyers are very much present at lower levels. I think the results have been received very positively by the market. It would seem from the upside gap which has held through the last 2-3 trading sessions that the market has been taken a little by surprise, and people are not used to Coal India running away. So I think the weak holders are actually getting out and the stronger holders are buying in. I would think this is one of the stocks which could probably buck the trend. If the market were to go down, this would be maybe one of the islands where buyers could probably hide in the coming weeks.
Yeah, the other big newsmaker was Sterlite. It was long awaited, but that green tribunal which would allow Sterlite to resume operations at Tuticorin. Now finally it has happened. It happened on Friday, and that led to Sterlite and Sessagoa both. Mind you, they now tend to move in tandem because of the impending merger, but it led to Sterlite and Sessagoa reporting, turning out with a green performance in Friday's session. So they ended higher in trade despite the market falling to 2.5%. Ambareesh, beaten down stocks, positive news for Sterlite in particular, but with the market being in the mood that it is in, what do you think Sterlite could do next week?
Right. No, basically you could have some knee-jerk reaction, but then if you look at the group history, they've been having a lot of regulatory issues across various companies in the group. And they've not really been really looked as darling of investors, and because of which I feel that possibly after that knee-jerk reaction, it'll just remain and stagnate at those levels.
Okay, take a quick break then on that note. When we come back, get your trades for Monday morning, talk about broader markets as well, which by the way fell pretty hard this week.
Okay, welcome back to your trades. Well, we spoke about the large caps in the last segment, but lots of mid caps in news for the right and more so for the wrong reason this week. First, talk about the numbers, and Aman is here to speak about some key numbers to which the stocks also reacted. Aman.
Let's start off with Opto Circuits that counter slammed down 40% in intraday trade on an abysmal set of numbers. The profits were down 95% at a meager 12 crores versus 209 crores, largely on the back this time around of high interest costs, which were up by 100% on a year-on-year basis. There was an extraordinary loss in the fourth quarter of 11 crores and the top line growth was lower by 31%. Margins also contracted to 13% versus 25%. Britannia Industries, on the other hand, put out a good set of numbers and the stock rallied almost 25% in the last 5 days, and it was really the margins which were taken down well by the street, 8.8% versus estimates of 5.5% on account of stable input costs. The profits were higher by 65% and the top line growth came in at 1486 crores, driven by the strong volume growth as well as pricing. The management has also indicated that they will continue to manage prices dynamically. And Madras Cements also put out its numbers, and it was a disastrous set at that. The profits came in low by 35% at 64 crores. And there was decline in realizations despite the strong presence in Tamil Nadu and Kerala. The sales were up by just about 5.5% and operating margins were down by 732 basis points at 15.2%. Interest costs were also high on a year-on-year basis by 13%.
Okay, Aman, thanks for those details from the broader markets as always. And Ambareesh, want to draw your attention to Opto Circuits. I mean, a 40% vicious cut coming in this week itself doesn't seem like it's just earnings.
Absolutely. I mean, in fact, we had given a sell call on this, I think, at closer to about 110 when the initial issues of corporate governance had come up. And the way we see it is most of the mid-cap companies are actually utilizing the current mood in the market basically to clear off all the skeletons of the past. So because of which most of them which had the skeletons in their cupboards are showing these huge losses. So I think most of these stocks where you have seen a major cut in profits and are showing losses, I think you could actually see those stocks still sinking further.
Yeah, in fact, one of them probably features amongst the top movers as well. Navneet joins us with a list of 2 or 3 stocks which were amongst the top mid-cap movers this week. Navneet.
Well, that's right. There were a lot of mid-cap stocks which were in focus during the week. First up, HDIL, which plunged close to 15% during the week on the news that MIL terminated the slum rehabilitation project of the company, because of which it had to write off about 442 crore in the fourth quarter. So, well, remember, this was the largest project which HDIL had. So, it's a major financial hit for the company. And the stock also hit 52-week low during the week. The company entered into an agreement with MIL in 2007, where as per the agreement HDIL was supposed to complete the project in 2011, which it failed to do so. Therefore the stock plunged during the week. Next up was AstraZeneca. The company's offer for sale was lined up during the week. Well, the stock had quite a volatile week, because just one day before the offer for sale, this stock surged about 17%, but the floor price came in at a discount of about 39% to previous day's closing. So you had stock plunging again 17% on the day of offer for sale, but during the week it had a good recovery coming in. For the week, the stock rose by about 20%. Offer for sale received good response from the market. It was subscribed about 4.8 times. And JP Infratech too had offer for sale during the week. Well, if you look at the floor price, which came in at about 35 rupees, it was at a discount of about 10% to previous day's closing. But the offer didn't receive that good response. It was just subscribed by about close to 2 times. And if you look at this counter during the week, it hit its 52-week low, and for the week, it closed down by about 14%.
Thanks for that, Navneet. Dr. Narayan, just one view and you would have guessed the stock, HDIL. What does one do here?
You have to sell, that is all. There is no other view to take on this stock. It's been a dog for a very long time. It continues to remain one. The news which emerges is consistently poor. I think stock is headed for about 25 bucks.
Wow. That means, well, okay, Dr. Narayan, so coupled with your stock recommendations, just wondering, would you, after the cuts that we've seen, would you take a short trade on HDIL? It's in the F&O segment. Would you do that?
Yeah, I would probably have, a long-term short in this until I see some changes. So that could probably run into several months also if the price warrants it. I have no desire to go long in it, and if at all I were to take a trade on it, it would be a short.
What about your stock picks, Dr. Narayan?
Well, on the stock side, again, I have picks on the short side. One is seeing Yes Bank. I think the banking sector is showing some bit of tiring, and stocks which were hitherto well patronized seem to be meeting up with some profit taking. Yes Bank in the region of about 495 to 500 should be shorted by traders, because I think they will be aided by some, let's say, profit backing by long-term holders as well. 510 should be the stop, and we would look for in the week a target at about 465. I think stocks from ADG pack seem to be under pressure again. Reliance Infra, big fall, preceded a couple of weeks by a big fall, again a big fall during this week. I think 365, 370. Look to short this as a stock, keeping about 7 rupees as a stop, and we can look for a target around 325, 330 during the week.
CK Ambareesh, good to have you guys on board with us. We wrap up then this edition of Your Trades the week ahead. Brace yourself after the breach of 6,000. Monday is going to be an exciting and nervous trading session. Catch you again with the markets on Monday.